Hi, this is Ian Coleman from PIA First. This is the video analysis for the week 21st of May 2018. We're going to be looking at the dollar index. We're also going to be looking at the FX majors, highlighting our support and resistance levels, and also where we think the currency pairs are heading this week. So we're starting off with the dollar index, the weekly chart. Here we can see that we've had an impulse Elliott wave formation completed to the downside, and we're now heading up in what should be a corrective formation. Now, why I say what should be a corrective formations are normally mixed and volatile and in three waves, and at the moment we've only really seen one drive higher after posting this bullish outside bar in the week 16th of April. However, we have just clipped the Ishimoku cloud, this quite dense Ishimoku cloud. So there is scope again for a corrective move lower before dollar bulls re-emerge, and we think sort of focus around the 96 level. So 96 is a 50% pullback level of this strong bearish move, and also the potential for the trend line resistance. So what we're really looking for this week again is to buy into dollar dips, but there are some currency pairs that are highlighting exhaustion. There's also some other currency pairs that are highlighting 261.8% extension levels. So we're expecting price action to be quite mixed and quite volatile this week, and we're going to have to be quite nimble, I believe, with the intraday trade ideas. So breaking down to the major currency pairs, and again we're just going to go through the time frames. So euro dollar rejected this 38.2% pullback level of this move. We've seen a good move to the downside, quite strong and quite impulsive. If we go to the weekly chart, we highlight the wedge formation breakout. If this plays out, then the eventual measured move is down here around about 106.10. We've got some bespoke support at 118.08, but we have closed the week below that. We've well and truly closed the week below this 161.8% extension. So over the medium term, we're really looking for a move down towards this area, which is the swing low from November 2017. November 2017, which comes in at 115.54, and then this 261.8% extension at 114.90. However, and that's probably the favourite word for technical analysts. However, we have got a 12 count on this daily chart here. 13 count highlights exhaustion. So there is scope for this sell-off to stall and reverse before we get the next impulse move to the downside. As far as Elliott wave is concerned, we've got drive 1, corrective wave 2, down in 3, then up in 4, and then down in 5. But the fifth wave is always the hardest to predict. And with this sort of confluence area around here as well, we're going to be very wary in the potential downside, should we say, in euro dollar. To the upside, we've got short-term resistance located at 118, the figure, and then if we break there, we've got bespoke resistance that's located at 119.61, and that's obviously very close to this reverse trend line. So these are going to be the levels that we're looking at initially going into next week. If we look to sterling dollar, and the move here has been quite aggressive, we're going to go to the daily chart first. Here we've highlighted a 13 count, so that is an exhaustion count, but because of the length of the candles, the actual demark stop is not located until 133.01, so we've still got scope for a move lower. And again, if we look to the left hand side of the chart, we can see that area has been quite pivotal in sterling dollar. So there is scope for a move here and then a corrective move to the upside. Resistance early on in the week is located at 135.20 and then 136.33. Dollar Swiss we quite like for a medium-term buying outlook. Just to break down the time frames, monthly we've broken out of this wedge formation to the upside. We've got reverse trendline support coming in at 98.94, and that's quite important for this analytical view. The weekly chart has posted a 13. Now, if we'd seen an aggressive move to the downside last week, then that would have formed an evening doji star, but it didn't. And in fact, losses have actually been quite mild and limited. If we go to the 4-hour chart, here we've got an expanding wedge formation, and this is really the pattern that highlights a continued bullish bias for dollar Swiss. Bespoke support is located at 99.25. Trendline support is at 99.12, and then Ishimoku cloud support is at 98.82. So all around this area, we've got potential for buying dips for a move back to the upside. Dollar yen, and this was the one that we're talking about, stalled at a 261.8% extension. Let's just go to the weekly chart first. We're in a corrective formation, so this does have an eventual bias to break to the upside. A break of 112.45 would confirm that, but looking here to the daily chart, we've got an impulse move to the upside. Okay, can be seen in 5 waves. If this was the 4th wave and then up in 5, we had a doji style candle on Friday of this week, around about the 261.8% extension. Again, if we get a move to the downside, we're looking for it to be limited. Bespoke support is located at 109.30, which is just between the 23.6 and 38.2% pullback level and near this trendline support. So again, price action will be pretty important on Monday. If we get a drive lower, and if we close around about 110.25 area, then that's going to be an evening doji star, and we're going to look for a corrective move lower before bulls reappear in dollar yen. I think probably the hardest currency pair to analyze, especially against the dollar at the moment, is dollar CAD. Monthly chart highlights a wedge formation that has an eventual bias to break to the upside. For the last 3 months, we've seen spikes in both directions. The weekly chart highlights that wedge formation a bit better, but this Ishimoku cloud is holding on to price action, and a lot of the time, if that happens, then the daily chart will see mixed and volatile price action. Trendline resistance is around about 131, the figure at the moment. Just go to the daily chart, we can see that this sort of mixed and volatile price action. We've got some support here at 127, the figure, and that could potentially be sort of a 3-wave drive lower before we move to the upside. Like I say, in dollar CAD, pretty hard to analyze from a technical aspect at the moment. Aussie dollar, monthly chart highlights a large wedge formation. We've moved away from the Ishimoku cloud, a break here, and there's potential to move all the way down to multi-year lows again if this wedge formation breaks to the downside. This is probably our most important chart for this currency pair. We've got an ending wedge pattern. We've broken to the downside, but again we've got this 13 count, so we don't want to be selling into 13 counts. We want to wait for a correction higher, and we've also got a 161.8% extension level here at 75.13, and dips underneath that level continue to find sellers. But reverse trendline resistance is located around about 76.65. We've got bespoke resistance at 76.32, and we've got Ishimoku cloud. So if we get a move to the upside, this is going to be our prime area to get short of Aussie dollar this week. Euro sterling, the long-term bias is bearish, but we've had a prolonged period, about 7 or 8 months of mixed and volatile trading. The weekly chart highlights that the Ishimoku cloud continues to cap buying. But again, I think probably the most important time frame is this daily chart. So this was the impulse move, then corrective channel formation up to the 61.8% pullback level. We've then moved lower, broken the channel, but then we've stalled again around this confluence area. Now, reverse trendline resistance is located at 87.71, and we've got bespoke resistance located at 87.58. So we're looking for mild rallies to get sold into at the beginning of the week. Euro yen, you'll all know by now we're long-term bears in euro yen. We've got this bearish outside month that was posted in February of this year. The Marubozu level, which is the midpoint from open and close, located at 132.76, finding sellers. Again, we're now inside the Ishimoku cloud, so we're sort of expecting weekly results to be quite mixed and volatile. Now, the only thing that concerns us here slightly is if we look to this time frame, this drive higher, although it did stall around about the 50% pullback level, normally corrective formations are seen in three waves. And with this resistance level up here, around about 134, the figure, there is scope for a higher correction in euro yen. Our first resistance level is located around about 131.52, and that's what we're going to be looking at the start of the week. And the reason we say that is because on the 4-hour chart, an AB CD formation is located as well at 131.60. Let's just go to the daily chart and we'll highlight what we're talking about with regards to a potential larger AB CD formation. So if we put the measuring tool, not up there, on here, and then to here. So again, scope for a move to the upside in an A, B, C, D formation. 61.8% is just round this previous trendline resistance. So we're actually square in euro yen on a medium term bias at the moment, and we're going to watch price action at the beginning of this week to see whether or not we do get a correction lower from 131.60, and if not, then really this level here, 133.75 ish, 132 the figure, sorry, 133.75, 134.50 is going to be our prime area to get short of euro yen. Okay, thank you very much. I hope you enjoyed the video analysis, and we'll be back soon with our forecast.